Welcome to Trading Lounge and the Australian report for the 20th of April. So this is our original count, but we've changed this count now. So we're looking at a bit of an ABC pattern here, and then one more move up through here. And the reason for that is we're moving this scenario over here, as we mentioned yesterday. So we're going to swap these guys around over here for this. We're going to use this as wave one here, so everything basically comes back one more space in this regard here, and then we'll have wave 5 of 3 up here for that. So we'll be going into a large wave 4 correction at that point in time. So just to do a bit of a shortcut here, the one that we're working on yesterday was this move here. So looking at wave 4 here with wave 1 and 2 and 1 and 2 and 3 and 4 and 5 coming up here. So we've started this ABC correction here. So yeah, we just really need to allow it to play out, and let's see how we go with it. So yeah, we're just still in the A wave here. We'll still need the B wave and the C wave here for this. Yeah, so let's just go, I think, let's have a look at the tick chart here for the moment. Still got the old count on it, but still, it doesn't matter, I'll just move things along a little bit. I just really want to have a look at this move here. So I can see that this is the third wave in the middle here, and we've got 1, 2, 3, 4, and 5. So we've got all of this. So I suppose we could look at it as an A wave and a B wave and a C wave down to here, but it's more likely that this here will be a wave 4 here, pulling back up to the 38.2% around this point here. It may rally a little bit higher and so on, but would be looking for, this is 1, 2, 3, 4, 5 here, so we can look at that as, I think I'm actually just going to put this here as wave 1 here, and wave 2 there, and we'll need wave 3, 4 and 5. I mean, it doesn't have to be 5 waves down, by the way, either. I'll just start with that. Whoops, the daisy, wrong one. I mean, because it's a wave 4 that we're moving into, this wave 4 can move back up to that wave 4 and retest that. And then this would make the A wave here, and then we'll have a B wave back over here, and then a C wave down here further. So I'm thinking finish this off in some way or another, down for wave 5. Not sure how far that will come down, but something like that. Then a wave 4 retesting supply, and then a move down, and then an A and a B and a C wave pulling back up to the 50-60%, and then another 5 waves coming down here. This is the most simplest explanation for this particular structure. So it could get more complicated, because the A wave coming down here doesn't have to be in 5 waves the way that I've got it. It can also be in 3 waves. So if that's the case and does drop here and then makes a little leg back up through here, then what you'll need to do is just take the top here, and wherever that low is down here, say on this wave 5 here, then look for the 61.8% back up here for that, because it will rally up here in 3 waves and then drop again. So not a time to go long just yet, okay? That's the main point here. And we'll be looking at this in wave 4 here. And of course wave 3 up the top, and we'll be going for a wave 5 over here for that. So that's the bigger picture there for that. So just pulling back out to the 2-hour chart here for where we've had this working here. So yeah, all we've done just then is pulled apart the A wave here. So looking at 5 waves within this structure. So down here for a nice little bounce off the 7,000 B wave here, and then a drop lower for that. Something like that. Maybe it seems a little bit small, but we'll just play that out. So we're not interested in shorting this. I mean, obviously knock yourself out, but I don't have I can't trade against the trend, the main trend here, putting a video out each day because there's too much change going on. So I can only, you know, sort of control this space that I'm in. So we'll look for the buying opportunity down here in this space and through here, and we'll build in through here and we'll move up. Not that wave 1 has to be, not the wave 5 has to be very long. It would be longer than, normally when the extension's in wave 3 here, that means wave 1 and wave 5 will be roughly the same, but it's just not, that's not going to cut it. So we'll just take 61.8% of this structure here. So we can take that length there, move that over there, will take us up to that 72 there, and remember that the 72 was the previous high as well within all of this. So back in the COVID days, before COVID occurred, we're at 77,200. So we're going to be having that double top there for that, and that's going to be wave 5 of 3 here. So then we'll see a bigger move down at that point. And it will be the banks that take us into that spin as well, mainly because the banks have got a bit more weighting, I think. The commodities look quite bullish, but we'll go to the banks first. ANZ here, so I'll just go to ANZ in the bigger picture first because you'll just get an idea of that. So what we're looking here for ANZ is well, we're just really looking, you know, we've got this ABC here, which is kind of big enough compared to wave 1, so looking for this to just make a new high into here. So taking profit at the old high here or a little bit higher is really what we're looking to do with this. We've got the trade to break even. We can bring it up a little bit more under this low here for that, just so we've got a little bit of profit. It's been a lot of hard work, all of that, so we don't want to lose it. Just go into the tick chart with this. So I have to point out too that this is where it can fail from here. So if I put this here, wave C here of B, and then wave C down here. So it's possible that, we talked about this before because I put wave A here. We know that we've got, this is our wave 3 here. We're looking for an A and a B and a C for wave 4 here. But we know wave 4 can get ugly, and it could just be the wave A here. This is the 50-60% retracement level here. The market's just above it a little bit. If it was going to be a B wave up here, then it would be an A wave here, B wave here, and then 1, 2, 3, 4, or 4 and 5 here for the B wave. So an A and a B and a C here for the B wave. So this is where it can fail from. It can move down from this point. So if you want to take a percentage or take money off the table, then this is it right here to do that. And hopefully we'll see it sort of push up. It will struggle a little bit, even if on the bullish count, if we looked at this as 1 and 2 here, and then we'd need to look at this as 1, 2, 3 here, across here for 4 and up here for 5 for this wave 3 here. So we can put that here. There may be another little jump in that, but it looks like there's sort of close to 5 waves here, but maybe another jump in there. If it was going to come back for a wave 4, for instance, well, then it will come back to the wave 4 here of 1 lesser degree before pushing up there in wave 5. So in one way or another, it may pop up here a little bit. In one way or another, we probably see it come back and then move up here again like that. That's the bullish count in that, to finish that off here, and then we can have wave 5 sitting over here. How far that will go up, I mean, hopefully it would push up above that that 30 there for that. But anyway, we're just doing this for a little bit of fun because it was just a bank, you know, on the banking side of things. So we needed something else to look at, and I didn't want to do Westpac because you know, ANZ's a bit more China-centric as well, Asia-centric. And then we've got CBA, which takes up, I don't know, 9% of the index or something, so it's a fair bit of weight on that. So just looking at it on the tick chart here, I don't need to go over, we've been studying this for days and days and days, haven't we? But it's nice to see it, you know, if we looked at this here as wave 1 and 2 here, and then wave 1 and 2 and 1 and 2, and as I mentioned, we need to see this like start to push up strongly from this point, and we've seen that, and it's occurring, isn't it? So and we've taken out the top of the wave B here, which was also really important, and that means it just confirms that this is a corrective pattern, and at some point we'll be taking that high out. So that's what we're doing at the moment. We could probably even lift our stop up here, and I think that we will, because it will make a big difference on the balance sheet. So that means we've only got well, I'll just put it up under here. So I'll just put it up here. No, I'll have to put it back under here, because this could just be the first high above the level. It could probably come back and cover that gap and check that. So maybe you've taken a percentage off the table here, or up here. That would be nice. It's a bit of a long shot putting this wave 1 and 2 here, but I'm basing it off 1 and 2 and 3 and 4 and 5 here. It's a long shot. I need to look at that a bit further. But yeah, it's pretty ugly structure, I have to say. I can see some of it. I can see, you know, I can see 5 waves in here, even though it overlaps here, and this looks, I mean, that could go over here as well for that, because it looks like it's got 5 waves down here, but that overlaps. But we're seeing this gap here, and where we're positioned with all this is telling me that we're in the 3rd wave here. So we should, you know, we should just push up from here with this. Yeah, we'll just keep this stop out of the way. We wouldn't want to get stopped. Oops, a daisy. Just keep it out of the way here for a second. I'll just change it in the colour. I mean, we should be at, you know, we should be above break even at this point, so. Okay, I'll leave it at that. So anyway, the banks are heading higher. That's all good. Obviously there'll be a resistance at 90, so if you wanted to take some off the table there, that would be a logical step to do, but I think we'll be going higher than that. Let's have a look at the commodities, starting with, let's start with gold. And what I want to point out here with gold, because we haven't looked at gold stocks yet, I didn't want to get people trapped. I know that it would have been nice to get into NCM at you know, where we originally said, with Newcrest here, you know, down here on this for this, and it's all possible. It's just that this C wave down here didn't make a new low below here, so I was a bit concerned about that. But going along above the medium level was the thing to do, but I didn't do it myself. But what I want to talk about though is the gold from the low, this is the low, we can count this up as wave 1 or wave A and B or 2, and then going up for wave 3 or C here. So what I wanted to say is that we can count here 1 and 2 here and 3 here, and we're looking for 4. Now 4 may get a bit more complicated and so on or whatever, it doesn't matter. But this wave 5 here, once we got that wave 5 in here, then any move past that, wave 5 here, then we know that we've got a bullish market at that point. Anything above that, obviously we'll be looking to go in long here and those sort of, but this A, B and C wave here and 5 waves here, once we're past that, then we know that we've got a bullish run occurring. But otherwise, this is where it can fail from. And of course that's going to reflect back in GDX and the other NCM and all the other big gold stocks as well. So that's what you need to be, that's what you need to understand with the gold, okay? So iron ore, doing everything just pushed up again nicely. Yeah, nothing really to sort of add here. I don't need to go to the intraday. I can see that it's going to be pushing higher. We're in that wave 1 and 2 here and going up for wave 3, and we'll go 4 and 5. So you'd have to say the iron ore stocks are fine. You know, they're going to be, you know, Rio, FMG, BHP's in this, of course, pushing up nicely. The next one we need to look at would be copper. So copper may have a top in here as a B wave, but I need a little bit more time with this. You can see that, well, we've got wave 3 over here with an A and a B and a C for wave 4, and we're looking for an impulse wave to the upside. But we just need to be mindful that we could have an A and a B and a C here for a B wave here, and that would sit right on the top there. There may be one more little push up there, but also here's kind of important with the trading levels. So we've got the medium level here, number 9, and then we've got group 1, minor group 1 of 1, 2 and 3, 100, 200 and 300. So this is a classic trading levels pattern occurring here. So we've got the arrival, the reaction, and the first high above the level. So we'd be looking for a move back down. So the arrival, the reaction, the first high above the level, and now we're looking for this move here. So it's come down here. So we're looking for that to pull. If that's the top of minor group 1 at 9,300, we want this pattern here, and then that will give us the go ahead over here. So that will tell us that copper is going higher, that we're not in a B wave. So we've got the arrival, the reaction, the first high above the level. So we need it to pull back down a bit to tell us that it's actually, and then it needs to do that whole process there and then move up from that point. And that will stop us thinking that this is an A and a B and a C wave, and we're going to be pulling back down into this space. This will also affect the Australian dollar as well. I'll just do that first because it's of the same pattern. Let me find it here. So just on the 4-hour chart first. So we've got the same thing occurring here as wave A, B and C here, and then looking for an A, a B and a C wave here. So we need to work past this now as well. We'll have a look at that on the intraday in a moment. But this can be all down for the A wave here, up for the B wave, and then down again here. So we need to get past this as well. So gold, copper, Australian dollar, we need to get past this possible ABC structure here for that. I'll go to the hourly chart here because we've got trades in this. So from the low here, looking at it as wave 1 and 2 here, and I still think that looks like it just doesn't look finished up here. It looks like there's one more little move here for that. I could be wrong for that. mean, 8's a profit-taking number. So anyway, lock some money in at that point there as well. We've got this trade, these two, well, I don't know what you've got in there, but I've just pointed out possibilities, you know. So you need to, you know, take a nice 60 or 70% at that point. We can always move back in. It's not a drama. And we'll have a look at crude as well. Crude. So yeah, the same thing with crude really as well, because we've got this 1, 2, 3, 4, 5 down here to this low here. I was looking at this as being the A wave here, and then the A, the B, and the C wave up here. And the C wave up here would be 1 and 2 in here somewhere. Nice strong third wave here, a fourth wave here, and then a fifth wave coming in here. So another little move up to this point. So that's where it can fail and come down here as a larger A, B and C wave here for this. So if this is the case with copper and crude oil and we're in BHP, well then this is something that you're going to have to either take profit in this session or the next session, and yeah, mitigate that risk, so to speak. I mean, I could be wrong and we could just go straight up from here. But I won't know that until we get a little classic trading levels pattern sitting on this level here. I'm probably dramatizing it too much, but you know, we're looking for something like that here, and we may get it here and we'll go straight up, you know, and there's no problem. All I'm doing is just pointing out, well, the 6,500, the 65 number is a medium level. Bitcoin's at 65,000 and it's reacted there. Crude has reacted there at 66,500. It could be $6.50 or 65 cents. Anyway, an important number. And 6,000 is important, 7,000 is important. They normally get the tops and bottoms of things, you know, so like these bottoms here and tops. So, but this is the balance point within that structure. It's also the lower end of group 2 as well. So we could look at 65, 72 and 80 here from the major level, but we normally don't look at it like that at this degree, at this degree of structure. Anyway, so yeah, interesting. Copper, Australian dollar and crude oil could have one more leg pulled back into this space, which will rock stocks. So BHP here. Now this is the Australian BHP, and it's moving into its 50-60% retracement level. Is at 48. So we look at 8 as a profit-taking number. So this is where it can, the bids can be hit here. This is where it can drop back at this point. And if crude is going to come into play, you know, and drop back, and copper is going to do that, then we would need to look at this as the bigger picture here, wouldn't we? As the A wave, the B wave, and the C wave down through here for this, before heading higher. Now, I don't know if that's the case, but it's food for thought. Like, this structure is very difficult to understand, but it's a little bit easier on the New York desk, so the ADR here. So we can look at it, so just from the low here, 100 ticks, as we looked at yesterday, we can look at it as 1 and 2 here, or an A and a B here, and then 1 and 2, and we've got 3 here. I can see that this is the third wave in through here. I'm just not sure how that finishes off there, but it will become obvious soon. But we've got one more push to come in here. But that could be the, you know, I don't know, it could be a wave 3 rather than wave C. So an A wave, a B wave and a C wave finishing here. Or it could be wave 3, 4 and 5 and move up here. But if it's this one here, then we're going to be coming down here from that point. So one way to look at that is that we can take the bottom of wave 2 here, the top of wherever wave this comes in, and I suppose we should kind of bring that back a little bit. 76.50 is a nice number there, but I'll just put it at the 61.8%. But that means that oops, a daisy, sorry about that. So the 38.2% is here. So we wouldn't want to see, that's at 73, which is good because that's the top of group 1. If we're looking at 70 as being important, which it is, then we can look at 73 here, and that would be 71 and 70 here. So I'll just increase that there. Just put it a bit stronger there. So we've got 70, then we've got group 1 here of 1, 2 and 3. We can see the 38.2% retracement level is there. Normally, this is where the number 2 comes in. If the 2 becomes the retested resistance, then we're going to be pulled down to 70 at that point. If we're going to be pulled down at 70, we're going to be pulled down below here for this. So this is what I'm a little bit afraid of, as the A wave, the B wave, and the C wave coming here, something of this nature, and then moving up. So this is where you've got to protect yourselves, guys, okay? And we'll look at this with Rio. So here we spoke yesterday, that's moved up nicely. So yesterday we spoke about taking a percentage or taking profit here. So I'll leave you with that, but just understand that, I mean, Rio's not so bad, but it will move with the other guys. I mean, iron ore looks quite good. I mean, this trend up here is going to be corrected anyway. You know, we're going to see something here. Definitely take something off the table here. I'm not sure how to count all of this, to be honest. I can see it in different ways. It's not very helpful. Let's get that to break even anyway, shall we? That's the main thing. Take some money off the table there. And we better look at FMG as well. I mean, I like it. I like this stock, you know, because we've got 5 waves here for this. Then we can look at this as wave 1 and wave 2 here, and then wave 1 here and wave 2 here. So I think this has still got further to go here. I don't think we need to panic about this one so much. I think this one can kind of do its own thing more, so it's not sort of influenced by the others so much. Can this be viewed in any other way? Now, it's pretty clear that it's 5 waves here, and we've had our pullback to the 61.8%, and then we got another 5 waves. I'm okay with this. What we can do, though, just to make things a bit easier, we can bring our stop up to under this low here, because that should not be breached. If that's breached, then we're on the wrong page, you know. So we'll tidy up the others, but we'll leave this one float. And it's much more mature in its correction as well. I think it must have started earlier in its correction. So it's just doing its own thing here. So I think we'll just leave this one open. What else is there that we wanted to have a look at? Kind of, you can pretty much work out most other things, you know, the banking and the resource from what I'm doing with all of this. So I'll just leave it at that. Alrighty, thanks for tuning in. Cheers.